Everyone, thank you so much for joining us today. Today's session is going to be heavily focused on R&D and specifically in relation to some of the changes that we've seen before. Just looking at the list of attendees, some familiar faces on there that I know, but also welcome to people that have not been to one of these sessions before. Just in terms of intros, I'm James Peck. I'm the head of tax for tech and high growth. So a team that specifically looks after VC, PE-backed scaling tech, consumer and e-commerce businesses. And I'm joined today by Mark and Caroline. Guys, do you want to do a quick intros?
Yeah, sure. So I'm Mark Frost, partner R&D tax at Cooper Parry. So there's a number of names on the invite, on the attendee list as well, I recognise. So I work across a lot of industries, but spend a lot of time also working with James on a lot of the tech and high growth clients.
And I'm Caroline Hawkins. I'm a director in the innovation team here at Cooper Parry. My background is as a corporate tax specialist. I've been working in corporate tax for 28 years, but for the last 13 years, I've specialised in helping clients access R&D and patent box tax reliefs.
All right, so we're going to run through fundamentally some of the changes that have been impacting on R&D. We're going to discuss the why, right? Because I think that's a really important question, getting under the skin of why there have been so many changes to the R&D regime recently and fundamentally how that impacts and affects businesses like yours. We'll touch on the new RDEC scheme. We're also going to cover off some of the changes that have come and therefore the impact and bearing that will have in terms of the claims that you'll be able to make either historically or going forward. You might want to grab a pen and paper because there's a lot of dates and a lot of changes that are happening. But again, if you're ever uncertain about any of these areas, we can always be on hand to support you through those. So we're going to talk about overseas R&D. We're going to talk about the new rules relating to subcontractors. And then we're going to talk about some new changes around pre-notification that can have a nasty impact in terms of when and how you need to pre-notify. And if you don't do them, what the bearing and impact of those can be. So we'll discuss those. And then to ensure that you all stay to the last minute, we're also going to give some views on what's going on currently with HMRC in terms of their processes and their inquiries, but really insightful information about like what we're hearing firsthand from HMRC, the way that they're approaching inquiries, and how that has a bearing impact about how you prepare and submit returns. So we'll cover off those areas. Just in terms of what we're going to do today, if anyone has any questions or queries, I'll have the Q&A or the chat open on the side. If you've got any questions in relation that you want to ask throughout, then please just kind of put a question into the chat bar. I'll make sure that I look at those and address them throughout, and then we take it from there. Right, let's kick start. Right, both of you. Open question. Huge amounts of changes going on R&D and specifically with HMRC over the past couple of years. Take us back. How did we actually end up here in terms of the position with R&D as it currently stands at the moment?
Yeah, sure. It's important to understand what's gone on over the last couple of years because that helps you understand how we get to the new RDEC regime that we're going to talk about for a lot of the webinar. There's so much that's been going on with the R&D tax regimes, as I'm sure everyone on the call is perfectly aware. If we went through everything that had been going on for the last couple of years, we'd fill the whole webinar and probably 10 webinars with all that background. So I'll touch on the key points that's got us to where we are today. So if you wind yourself back to, I think it's almost 3 years now. It's how time flies. In short, HMRC hadn't really done much with the regimes for a long time. They hadn't changed much. I think the last probably biggest change, if you go back a bit further, was probably the introduction of the RDEC regime back in 2013 to 2016 when it phased in. Hadn't been much that changed since then, really. There's some bits and pieces. But about 2 to 3 years ago now, they hit a point where they realized there was a lot they needed to change. And all the changes they made were kind of driven by three things or three main areas. One was around fraud in the regimes. And there's been well documented on LinkedIn and even on the BBC News website about fraud going on in the R&D tax regime, stuff being claimed that shouldn't be claimed. There was a big need to modernize the regimes. Like I said, they hadn't changed much. And there was a number of things they needed to modernize with them. And the third main area was around simplifying the regimes. So I think this even goes back to when Rishi was Chancellor, not just Prime Minister. That's how long back this was now, where they kept talking about simplifying the regimes. So there's a whole raft of changes. So under the kind of the fraud, again, this is, I think, well documented. There was a lot of issues with people claiming stuff they shouldn't be claiming, some bad advisors out there advising people to claim stuff they shouldn't be claiming. And largely this stuff would get through. So HMRC, one of the things they did was stood up a load of new R&D staff, R&D inspectors. In I think everyone's well familiar with the individual small business compliance team, where they stood up about an extra 100 or more additional people to review claims. So they greatly increased their bandwidth, which obviously meant they could review a lot more claims and review it much more thoroughly. That went hand in hand with the number of inquiries going through the roof. At one time, supposedly, they're inquiring into about 1 in 5 claims, about 20% of claims. I think that's settled down a bit now, but it's still much higher than it ever was years ago. And they also introduced the additional information form back in August 2023 to standardize how people are telling them about their claims and justifying the R&D. That also means you have to be clear about who your R&D tax advisor is as well, which HMRC have been using the profile advisors. So there's a load of things under that, helping them clamp down and scrutinize and stamp out the fraud. Under the modernizing, we had things like the data and cloud costs coming in, which are now an allowable cost category. That should have come in 10 years ago, more than 10 years ago, right? Particularly for a lot of our tech clients on the call. It hadn't, HMRC hadn't modernized the regime, but that's now come in. The guidance, even modernizing the guidance, they released at the end of 2013 what they call the guidelines for compliance, which was their new guidance about a number of things, but particularly how to take the definition of R&D for tax purposes and apply it to your business and the projects. That guidance, there haven't really been much updates on that kind of guidance for years. Some of the guidance around software still went back to some of the original guidance where it talked about search engines back in like the year 2000, right? That's how out of date that was. But then there was a number of changes as well coming under simplifying the regime. So that was their third main sort of banner of changes. And this brought us to what they were originally referring to as the merged R&D regime. So they wanted to simplify the regimes by taking the SME regime and the RDEC regime and merging them into a single regime, which has kind of brought us to now. They've been referring to it up until this point as the merged regime. I think everyone knew pretty early doors what they were really doing, which is scrapping the SME regime, which is basically gone, and putting everyone under the RDEC regime. But the new RDEC regime, which is how they're now terming it. So the language of merge regime is gone. They updated the CURD manual, the R&D manual, just back in January. Talks about new RDEC regime now. Everyone's going to be now claiming under that. So that's a short history of the last 2 years. And there's a lot of things I haven't touched on and missed out because we just haven't got the time. But that's brought us to this new RDEC regime that we can get into and talk more about.
Yeah, that's a huge amount of change coming from both a legislative perspective, from an HMRC perspective. There's so many areas that we could delve into. Quick question. Do you think that because obviously the time when it was really hugely concerning to businesses was the volume of inquiries that were being seen? And I know we're going to talk about inquiries at a later stage, but what is your general feeling in terms of like the volume of inquiries now and also the nature of those inquiries?
Yeah, can I take that one?
Yeah.
We saw a huge increase in common with every other R&D advisor out there. As Mark said, HMRC previously were inquiring into about 1% of claims, and as a result of cracking down on this error and fraud, they needed to increase that to around 20%. So 2023 was the high point for new inquiries, and we'll talk, I think, probably a little more towards the end in terms of how that's panned out in terms of how HMRC have operated that with the ISBC team. Have to say that we saw a real drop off in inquiries during 2024 in terms of new inquiries opened, less than a dozen, which was very welcome. We've also got more of a split now between the inquiries opened by the ISBC team and the inquiries opened by the WMBC team. And again, if we've got time, we can go into what those differences are. We are also seeing some successes in terms of a changed HMRC approach, not necessarily across the board. We are still getting the odd one or two old style ISBC inquiry letter, but we've definitely, I do feel there's a little bit of a change in the air at the moment. Well, I'm hoping there is anyway.
Yeah.
That's super interesting. Is it, because I know there was a lot of kind of commentary at the time, right? And I even posted quite a lot about the R&D and the changes. Do you think that is there any truth in the kind of assertions that HMRC were basically training people, and that's why there were so many inquiries, because they obviously put a load of new people on the ground into those units, and they used them fundamentally to help them understand R&D, and that's why there were more inquiries. And now, as we see now, we're in a different position. We're not getting as many inquiries. Is it because they don't have as many staff or junior staff, and therefore, is that not the case?
No, I don't think so. They absolutely deployed 400 extra staff, actually. And in HMRC's own words, the deployment of those staff actually did outstrip their training abilities. So that's HMRC's, confessing that they've got untrained people basically running inquiries. I think that there was a real need for HMRC to be able to demonstrate that the SME regime wasn't working. The ISBC team in raising all of those inquiries was a means to an end, really.
Understood. All right, we won't get too political, but I can see there is a political angle there.
Absolutely.
Right, let's get back on track. I'll stop asking awkward questions. So, we've got the new R&D new RDEC regime, not the blended, the mixed R&D regime. Tell us a little bit about the new changes that are coming in relation to those.
Okay. So the new RDEC, which I may well call the merge scheme because that's what we've been calling it for the last 18 months, but the new RDEC comes into play for accounting periods beginning on or after the 1st of April 24. So if you've got a March year end, you're coming up to the end of your first year in that new regime. If you've got a December year end, you're just into month 2. To understand what that new RDEC means to claimants, then we just need to perhaps roll back a little bit and look at what R&D looked like under the old regime. And Mark's mentioned we had 2 regimes previously, old RDEC and the old SME regime. So we've replaced those two regimes with just the one, which ties into the simplification that Mark was talking about. Apart from there isn't just one R&D regime in the UK, because we have a separate one, which is available for small R&D intensive companies. So park that for a second, and we'll come back to that one, because it kind of defeats the object of simplification to a certain extent. There are changes to all claimants with the introduction of the new RDEC scheme. So we're going to talk about some of those changes in terms of overseas activity and also R&D carried out under contract. But I feel that the extent to which claimants will feel the effect of the introduction of the new RDEC will really depend on whether they were claiming under the old scheme, under the old RDEC, or under the SME regime. And that's really because the new RDEC looks very, very similar to the old RDEC in terms of how the relief is given effect and in terms of the rate of relief. So under both old and new RDEC, the net benefit for claimants is 15% of their total qualifying expenditure. And how that relief is given effect is a company will calculate its total expenditure that qualifies for R&D relief, and it takes 20% of that amount to its P&L account as a notional grant. So that's good because it helps to increase the visibility of the value of the R&D to the business. That notional grant is itself taxable, and most companies are paying tax in the UK at 25%, and 25% of the 20 takes us down to the 15. So that's where the 15% net benefit comes from. Loss-making companies actually benefit slightly more for the way the legislation works, and they get 16.2% benefit. So long-term RDEC claimants have actually seen their rate of relief increase over the last few years. It went up from about 10.5% to 15%. Now, for companies that have previously been claiming under the SME regime, it's a very different story. So up until 2023, claimants under the SME regime were benefiting to the tune of about 25% of their eligible R&D expenditure. And loss-making companies could benefit even more than that. They could get about 33%. Hugely beneficial regime, which is why we had the levels of error and fraud that we did. As part of kind of reducing that error and fraud, HMRC did take an interim measure before the introduction of the new RDEC, and those rates of relief were reduced slightly with effect from 2023. So for profit makers, it went down to 21.5. Loss makers saw that 33% come down to 18. Obviously, the introduction of new RDEC, which is bringing in that 15% or the 16.2, is really kind of further eroding the value of relief for the ex-SME claimants. So companies that have been claiming under the SME regime over that period of time will see their benefit reducing by 40% or more than half if they're a loss-making company. And I don't think we can underestimate the importance of that. I did say one of the other areas that I work in as well as R&D is Patent Box. This webinar is not about Patent Box. We need to do a whole separate webinar on Patent Box. But it would be remiss of me not to say Patent Box is a really great option for companies, that SMEs who are seeing the value of their R&D relief to reducing. I would encourage them to look at whether Patent Box can help fill some of that gap.
It's really
just on that point, Caroline, as well, a lot of the inquiries now recently, HMRC will ask, have you patented what you've made as a result of your R&D? And if not, why not? Which we could probably circle back to in the HMRC chat. But it shows, I know what they're getting at there, but it shows a bit of thinking for them between.
Yeah. They definitely did that in the early days. And then when we started writing back saying, yes, they've got patents, they were like, oh dear, that's not really what we wanted to hear. So they stopped asking that question.
Is it worth us taking 2 minutes just to kind of like very, very high level? Because there'll be companies on here that potentially haven't thought about Patent Box in the past. Like, what are the main benefits attaching to Patent Box?
Okay, I didn't mean to dive to send us down a Patent Box rabbit hole, but very, very briefly, Patent Box is a complementary relief to R&D, so you can claim both. And Patent Box, if R&D relief is to encourage companies to develop new technologies in the UK, our Patent Box, the aim of Patent Box is to encourage companies to retain that intellectual property in the UK. So it offers a reduced rate of corporation tax. So I said that most companies in the UK pay corporation tax at 25%. Patent Box offers companies the chance to pay tax at 10% on their patented profits. That's probably as much as we can cover today. Yeah, I think.
Let's cover that there. So yeah. So they can work hand in hand. You can claim R&D and you can also claim Patent Box.
Yeah,
it's a great way if you're thinking about developing technology, if you're developing anything that needs to be patented in the UK, then actually it's a great way of thinking about optimizing your effective tax rates.
Absolutely.
As a group, collectively.
Yeah, I would go a little bit further and say anybody who is carrying out R&D, it's absolutely worth your while to have a regular annual conversation with a patent attorney who will, the good patent attorneys will come out and have a half-an-hour conversation with you. We've got a network of patent attorneys that we can link clients into in software in all industries. And not only obviously for the Patent Box, but also for the commercial benefits, just be having a look at what technology are you developing and is patenting an option. There's a lot of hesitation in the UK around going down seeking patent protection. People think it's too expensive and it takes too long. When you factor in the potential Patent Box benefit, the expense point becomes a very different kind of question. And in terms of the length of time, there are all sorts of ways in which actually patent attorneys can work to make things, to get patents granted faster. If we do a Patent Box webinar, Mark and I will tell you about the patent for green technology, which is to do with coming up with a more efficient bicycle, but that is definitely going down too far.
We'll do another session on later in the year, because I think
it might be worth. Could I just to chuck in as well, thinking of software and software claimants, from what we've learned from working with patent attorneys for the last few years in particular, is that people always think it is really tricky to patent software in the UK. I know it's historically easier in the US, but actually there's been some cases recently and some changes that in theory means it is easier to get patents on software in the UK. So I'm not a patent attorney, so I'm not offering advice, but it is. I think a lot of people still think, I can't get that patented because it's software. But like Caroline said, there's a lot of good software patent attorney experts out there that could help.
Let's set up another session on that, and maybe what we do is we do it alongside one of the attorneys, and then we can
that's really good.
Right, let's start that for now. Let's get back into the world of R&D. So
just before we move on, shall I just tell you about the enhanced scheme? Because I know I said I'd come back to it. So just before we move on, just on that enhanced scheme then, this offers an increased rate of relief for R&D intensive loss-making SMEs, and the net benefit for those companies is 27% as opposed to the 16.2. What I would say around that is there are intricacies around the qualification there. So what makes a company R&D intensive? These rules have only been with us since April 23. They've already changed twice. As a general rule of thumb, I would say it's going to be very difficult to qualify as R&D intensive if you're a member of a group, and that includes worldwide groups. So definitely something to consider and look into if you're an SME loss making. But I would advise that you get some advice fairly early on in the process to see whether or not you really will qualify, because like I say, it can be very, very tricky to get over that bar.
Oh, sorry, my contact lens has just come out.
Oh,
right. Can you tell us about, so quick question about, are there any changes to the overseas R&D regime?
Yes, overseas restrictions. So yeah, this came in hand in hand, or is coming in hand in hand with the new RDEC regime. So as Caroline said earlier, we're talking about accounting periods starting on or after the 1st of April 2024. So these are basically brand new rules. There's other regimes around the world that have had similar restrictions on overseas R&D for a long time, but this is brand new for the UK. So I'll start simple with this, and then we can dig into a little bit of the detail. But simply put, moving forwards, HMRC are taking this view of R&D performed overseas. You're not able to claim in your UK R&D tax claim. When you dig into it in a little bit more detail, you know, one of the main reasons they brought it in, right, is they were seeing some companies who had, should we say, a limited UK presence, but perhaps recharging a lot of costs in from overseas and then making sizable R&D tax claims when they perhaps weren't contributing all that much to the UK economy and tax collection and so forth. I think there's a little bit here, probably they were looking for some cost savings on the R&D regimes, which they're quite open about in the consultations a couple of years back, as they've broadened the RDEC rates and the data and cloud costs. They were looking to claw some costs back somewhere. So this helps with that. You can't help but think it feels a bit like protectionism as well. There's definitely a need to keep. They want to keep R&D happening in the UK or incentivize more R&D in the UK as opposed to using people overseas.
You can see that argument. You can see the argument that if you're using third parties overseas, like, you know, it's about the whole premise around R&D is to incentivize companies to develop the tech here, right, and to keep it here and to hire people here. So I can see the argument that they've adopted where overseas R&D potentially could be taken out. What are there any exceptions to this rule though?
Well, there's some nuances. So when you get into the guidance and the legislation, right, it's specifically aimed at externally provided workers and subcontractors. So that's a really important point. They're not looking here at staff. And when I'm talking about staff, I'm talking about UK staff, so staff of the UK entity. This is purely focused on the externally provided workers and subcontractors you might be claiming for, and particularly with the subcontractors, right? They are looking for that activity, the R&D activity done by the subcontractor to be in the UK. For externally provided workers, they're looking for a clear link to PAYE and NIC contributions, basically. So it is restricting it in that sense. It's also worth just on that point mentioning it doesn't apply either to where you might have sourced consumables from. So they're very clear again in the guidance. If you've sourced steel from overseas to build a prototype you're building in the UK, it's not designed for that. It's not about restricting where you can source materials from. It's equally as well thinking of the tech clients on the call, where it doesn't matter where you're provisioning cloud services from or anything like that. That can be overseas. It's not about those costs. It's just about the EPW and subcontractor cost categories. But to your point, James, you're absolutely right. They do outline that there can be some exceptions. Now, I think in most instances the exceptions aren't going to apply for people, but it will for some. So the way HMRC approach this, they say if the conditions, this is this term they use, right? The conditions you need to do the R&D or some element of the R&D are not present in the UK and are present overseas, and it would be wholly unreasonable. That's their phrase, wholly unreasonable to replicate those conditions in the UK. Then you might be able to get an exemption, and they might let you claim some of that overseas activity potentially. And when you look at the guidance And again, it's worth pointing out, right, this is kind of uncharted territory we're entering, right? And exactly where HMRC will draw a line on what they're going to give an exemption to and what they won't will remain to be seen over the coming year or two. There's in the exemption section, when you go through that, it'll talk about other geographical or environmental conditions that you can't get in the UK. And they give examples around like deep sea. You need a deep sea environment in the ocean to do testing of a submersible prototype you've developed or something. You can't do that in UK waters. You've got to go somewhere else around the world and use people there, and you can look at claiming those costs. They talk about volcanoes as well. I've always smiled at that. I always wonder how many UK companies are doing some research but where they need a volcano to do some testing or something. I'm sure it's not going to apply to many, but
Amazing.
But they also go into, if there's legal conditions, even medical conditions they talk about. There was a company I was talking with a few months back in the drug development space, and they need to conduct trials as part of that drug development. And sometimes, this particular company, I think it was a cancer drug, if I remember right, there wasn't enough people with this particular condition in the UK for them to be able to conduct the trial in the UK, and therefore they've basically got no choice but to go, conduct those trials overseas and stuff. So there's things like this, geographical, medical, legal conditions that might come into play. It's worth stressing, though, and HMRC stress this, cost is not an exemption condition. So again, I know a lot of people will be subcontracting or doing some R&D overseas because salaries are lower, costs are lower. That's not going to count as a criteria. Also, as a final point on this one, it's worth bearing in mind that this restriction applies for connected as well as unconnected EPWs and subcontractors. So if you've got externally provided workers who you would have been claiming perhaps as connected party externally provided workers historically because they're staff of a overseas entity, the restriction equally applies to them as it does to unconnected. So it's going to hit for our tech clients on the call. I think that's, of all the industries, that's probably the industry that's going to be hardest hit, because I know a lot of people are using offshore development centres. Generally speaking, all that stuff will be out of scope going forwards.
But as you said before, that's the downside in terms of reduction of expenditure. But they have then brought in the cloud costs, and is there anything else as the silver lining?
They brought in the cloud costs. They brought in the data costs. They brought in maths, didn't they? Maths became an allowable area of science, field of science and technology. Again, how many taxpaying companies, or not taxpaying companies, are doing research into maths? It's usually the kind of thing that's the reserve of universities and academics. But there are some industries where it becomes applicable. And like Caroline said, obviously for the RDEC, for people who've been claiming under RDEC for a number of years, the RDEC rates went up as of 1st of April 2013 from 13% to 20% headline rate. So they've been giving some bits back in that sense here and there. It'll be interesting to see, and this will take a year or two for this to materialise. What's the cost of the regime going forwards now as a result of all these changes once the new RDEC regime settled down? Because that was a concern. Like Caroline mentioned earlier, the cost of the regimes have rocketed. Some of that was fueled by the fraudulent claims and the fraudulent cash tax relief being claimed. But with all these changes, it'll be interesting to see where it comes out now. But we won't know that for a couple of years, really.
No, got it. All right. So we've touched on overseas R&D. We've lightly touched on potentially some of the changes coming around subcontractors. And the new rules in relation to those. Before we get into the changes to subcontractors, can we just pair it back for a second? Because some people on the call might not know the difference between a subcontractor and an EPW. So can we start at that place and then explain what the new rules are in relation to, please?
Okay, yeah. So the difference between subcontractors and EPWs, the best way to think about an EPW, and Mark and I were talking about this earlier, is an EPW is effectively somebody who is akin to being a staff member, but they're just paid by somebody else, if you like. They're paid by a third party. So it's effectively when you're buying in labour, whereas subcontract is when you literally outsource part of your project to somebody else. Whether or not something is subcontracted or otherwise has been the subject to really quite intense debate over the last few years in terms of the old SME regime in particular. And it is, I think, probably worthwhile going over where we've got to today in terms of the old regime and subcontracted R&D, because that has had a bearing in terms of how we're going forward into the new RDEC with subcontracted. So under the old SME regime, it wasn't possible to claim for either subsidised or subcontracted R&D, where the R&D had been subcontracted to the claimant. And what was meant by subsidised and subcontracted really became the subject of very intense argument and debate, and ultimately tribunal cases. And just such a huge amount of uncertainty around this whole subject, and that's still being felt by many claimants today. Essentially, what happened was HMRC changed their interpretation of the legislation and their guidance in this area to argue that any kind of R&D activity that was carried out in relation to a commercial contract was either subsidised or subcontracted, and therefore relief wasn't available under the much more beneficial SME regime. The initial tribunal case on this was a case called Haddy back in 2000. Now, Haddy was decided in favour of the taxpayer, but Haddy was a really bad case. The taxpayer Haddy was decided in favour of HMRC, but Haddy was a very bad case, and the taxpayer lost that decision because they didn't have the documentation in place. And I would say that's a really important lesson to take away from today, is documentation is really important, even more now in 2025 than it was in 2020 when Haddy was decided. But anyway, Haddy was a bad case, but HMRC really hung their hat on Haddy and said, yep, we're right. Anything done under a contract effectively is subcontracted R&D, and so you can't claim SME relief.
Yeah.
There was another case pretty soon straight after, which was called Quinn, and that was decided in favour of the taxpayer. But interestingly, HMRC decided, well, we don't really agree with it. We're not going to appeal it, but it's only a first-tier tribunal decision, so we're not going to follow it either. We're not going to say it's got legal precedent. And what that meant was taxpayers were left in a no man's land of confusion, and that's just anathema, isn't it, to the operation of any effective tax system when people don't know what the rules are. So we had this period for 3 or 4 years, and we were all waiting for some more tribunal cases. So we knew there were these 2 tribunal cases coming on this exact same point, and these cases were heard towards the end of 2023, but for whatever reason, the decisions weren't released to the public until the end of last year. So, that's like a 2 or 3, 4 year period where, like I say, we didn't know what the actual rules were. Now, the good news is that in both of those cases that we got the decisions for last year, it was found that HMRC were basically wrong in their interpretation of the legislation. And just because work is carried out under a commercial contract, it doesn't necessarily mean it's subcontracted or subsidised. There needs to be a really clear link for expenditure to be subsidised between the price paid and the R&D expenditure. And then on the contracted out, there needs to be the R&D really needs to be required by the contract. So in the Collins case, Collins were a construction company. They were building buildings, and they would be contracted to deliver a building for specific projects, specific price. The R&D that Collins had to do to get that building was completely incidental to the customer. So we have got some sort of certainty now and clarity over how it worked in the old rules, albeit we are still waiting for HMRC's guidance to come out. It's due this month. So you can see that's just a whole mess of 5 or 6 years where people haven't really been clear what the rules were. We're still not clear today. So as part of HMRC, part of the simplification around the introduction of the new RDEC, HMRC have really kind of hung their hat on making the rules much more simple, which is to be welcomed. Apart from, we are still left with some quite subjective aspects of the legislation. So in terms of the new rules, the new RDEC and how these rules work, first of all, we don't need to worry about subsidised. So you can claim new and old RDEC for expenditures being subsidised. So we don't need to worry about grant funding or anything like that. So whereas SMEs might previously have had to take into account grant funding, that's gone now. We can forget grants and things. A point that is worth noting is previously under the old RDEC, companies couldn't claim for subcontracted costs. So, for example, if you were having testing done externally, then you wouldn't be able to claim for those costs. So again, for our companies that were used to claiming under old RDEC, definitely start to get some systems in place so you can start to collate testing costs and things that you wouldn't have had previously. But then when you're doing R&D, which is in some way tied back to a contract to a third party, the legislation is written in such a way that the R&D on the face of it belongs to the customer under the contract. So, like I say, on the face of it, that looks like a really welcome simplification. So in the case of Collins, the building company that I was talking about in the tribunal, on the face of it, that R&D would belong to their customer. Apart from, there are some legislative tests around this, and I think they give a really high bar, which the customer needs to meet for the customer to be able to claim the relief. So the tests are that it must be reasonable to assume, that's a great phrase, isn't it? Reasonable to assume that R&D of that sort would be required, that the customer intended or contemplated that R&D to be required as part of the contract. So there's some interesting concepts there, isn't there, around reasonable to assume, intended or contemplated, R&D of that sort. And what does that actually mean? So in the same guidance that they issued on the overseas, they issued some very detailed examples around what they do mean by that. And I think they really kind of illustrate it is a high bar for the customer to be able to claim that relief, because really what the guidance tells us is that the customer needs to have a technical expert in the field of science and technology who really inputs into the requirements of that contract. So effectively, the customer needs to have a competent professional in the field of science and technology. So in the Collins case, where they're putting up buildings for whatever kind of companies, highly unlikely that the customer in those cases would be able to claim the relief because they wouldn't have a competent professional in that field feeding into the contract. I suppose what I would say for whether you're the customer or the supplier carrying out R&D in relation to any contract, really important that you start to think about these things even before you get to the contract stage. So as Mark said, we're not going to feel the impact of these changes for a little while, but certainly as we start to get into new contract negotiations, really important that we're thinking about the documentation that we've got in place. So whether you're a customer, to show that you meet those legislative tests, or whether you're the supplier who's wanting to show that R&D wasn't thought about at the contractual stage by the customer. Really key that you have those documents in place to show that.
It's the timeliness of that as well, isn't it?
What, sorry?
Putting in some documentation 6-12 months after the event.
No, it's got to be, the test is that the competent professional is involved at the time of the contract. They've got to actually feed into the contract. So we really need to have evidence in the form of meeting notes, file notes, emails, etc., to really support that. And the legislation actually says with regard to the contract and the surrounding circumstances. So it's definitely not enough just to put a clause in a contract saying, oh, the R&D belongs to me, the customer. That won't wash, unfortunately. It will be interesting to see how this pans out in terms of the supply chain and whether parties use their different kind of commercial strengths to try and influence the decision. But yeah, it's all going to boil down to documentation and making sure that the documentation supports what's actually happened in practice.
I think it's going to be the greyest area, isn't it? I think going forward.
Yeah.
You know, some of the overseas changes, some of the others are a bit. There's some grey areas here and there. There always is, but it's much clearer. That subcontracting rule.
Yeah, intended or contemplated. I mean,
there's too much subjectivity with it. That's the problem. And absolutely. The problem is with any type of legislation, any type of tax legislation, once you put in any wording around that, it's potentially open to abuse.
Absolutely, yeah. Yeah, and you've got 3 or 4 in that one piece, that one subsection. You've got 3 or 4 really kind of phrases that are really open to interpretation. So
Yeah.
Absolutely. Right, should we move on? Because I do want to get under the kind of current HMRC review process and kind of our view in terms of the inquiries that are happening. So you mentioned before about, and this might mean this, I think it's important that we get under the skin of what ISBC means and WMBC. Like again, like we're using phrases, but understanding, are there different teams within HMRC dealing with different inquiries?
definitely. So pre 2022, 2023, before the kind of crackdown on error and fraud that Mark mentioned at the beginning, the vast majority of HMRC R&D inquiries were run by their WMBC team, which is the Wealthy and Mid-Sized Business Compliance team. Now, no taxpayer or advisor skips around the room with joy when they receive an inquiry from HMRC. But as reputable advisors, we absolutely recognise that the inquiry process is a really important tool by which HMRC can ensure the tax system operates fairly. And working with WMBC as advisors and taxpayers is usually a positive process. And that's because the HMRC have one caseworker assigned to the case. That caseworker, as advisors and taxpayers, we have a contact number for that person, we have an email address for that person, and the caseworker 9 times out of 10, maybe more, is super keen to interact with the taxpayer. They really want to get out, sometimes they're too keen, to meet with the competent professionals and to really kind of speak to those people and understand what is it that this company is doing and does it meet the barriers, the boundaries of R&D. So at that point, like we've said, the WMBC were inquiring into about 1% of submitted R&D claims. Clearly, with the value of the relief that we've seen, plus the fact that you can actually get cash back from HMRC without having to put anything into the system, and that it was really open to that abuse. And what part of the way that HMRC had to challenge that was by dramatically increasing the activity around inquiries, which is where the ISBC team comes into play. So that's the individual and small business compliance team. And this is a kind of team that gets deployed to tackle various different issues depending on what the hot issue of the day is. So this is where those 400 new staff were deployed, sometimes before or after their training, depending on what HMRC were, how good the training was. Anyway, as part of that, they actually operate in a very different way to WMBC. So they operate a volume-based compliance approach. And what that means is I, as taxpayer, submit my additional information form and my report. James, you're the first caseworker in ISBC. It comes through for review for whatever reason. You pick it up and you might ask, they were fairly standard, a template of questions that might be around the projects, it might be around the expenditure, you might be wanting invoices, contracts, you'd be asking questions about the competent professionals, have we, like Mark said, have we sought patent protection? And these could be quite detailed inquiries. So I, as the taxpayer, would get your letter. I typically have 30 days to respond. So I would work either on my own or with my advisor, take a huge amount of time and potentially cost as well in terms of professional fees to respond. And these responses are chunky documents, typical responses about 10 pages. We've sent some back that are sort of 40, 50 pages by the time you've kind of brought into account all the appendices and so on. Now, that wouldn't go back to you because you'd be off working on a different case. Mark comes along and he picks up the next case off the pile, which is mine, and he sees all this paperwork and he doesn't know why you asked those questions in the first place. He doesn't have any background to it. He doesn't know what's been going on. So he starts again, if you like, or at least that's what it's felt like at times. We've definitely had cases where HMRC have been asking the same questions and clearly and very evidentially not responding to the information that we sent in before sending out a whole load of different questions.
That is so infuriating.
Oh,
having to answer the same question that you've already responded to because a new caseworker is working on it. Yeah.
And you can have, typically it's about 3 or 4 rounds of correspondence before HMRC will come to a conclusion. And you won't get the same caseworker. Absolutely impossible to speak to anybody. It's also they won't kind of meet, or there's no way to kind of get over that. It's very, very written dialogue.
They openly admitted, didn't they? I think it was in one of the communication forums a year back now. They openly admitted they've been trained enough
Yes.
with R&D inquiries, but they admitted they had not been trained enough to converse with claimants and advisors on a telephone, which was why they blanket refuse any telephone conversation. So when you're left just responding by a written letter, which feels pretty archaic these days, doesn't it? Write letter, PDF it, send it off, get a letter back with more questions, PDF. Like it becomes a very drawn out process.
Yeah, really protracted.
That's really useful context. Yeah.
Sorry.
I just said that's really useful context, because so many of our clients and the companies that we're working with have just expressed this frustration that they were, trying to, and it makes sense, right? So if you went into ISBC, you were addressing the questions they were asking, and Caroline, it's so interesting hearing you say what, because the reason I asked the first question when we first started was, were they training people on using this? We had a couple of times, like, you could see, right? So what would happen is an inquiry would come in, and it would come into a client, right? You would look at the questions and you'd be like, these are very basic questions. You could look up on LinkedIn who the inspector or the individual was, and you could see that they'd not been at HMRC for a long period of time. Therefore, you could assume, that they'd not worked in R&D for a long period of time, and therefore they were new to this. Like, some of them, they'd been there like less than a month. So you're like, in what capacity did you had any training in that time frame for you to actually be able to upskill yourself? So I remember doing that and seeing a couple of inquiries, and as you said, the volumes were quite high at that time, and we had really solid claims going in that had dated back historically, that were to do with a lot of like development of proprietary technology, right? True R&D.
Yeah.
And you would reply to those, and then it was almost like a stalling tactic, right? That was used, because no, I won't have a phone call with you, right? You will reply to more messages, and this would go on for a long period of time when you're trying to go back and forth again with and from our client perspective, they're like, I don't understand what's going on. Like, we've claimed R&D for years. You've told us it's good R&D. We're like, yeah, it is good R&D, but it's literally just stalling it. Yeah, thank you for that. It's really helpful context.
Yeah, and there is a human side to this as well. We've seen companies who just haven't been able to kind of keep persisting keep pursuing those claims all the way through, where ultimately it's had a really detrimental effect on the business to the extent that they can't continue.
Where are we? I've got to move on because we've only got 10 minutes left, and we still need to cover a bit on pre-notifications. Yeah. Where are we at the moment in terms of the kind of review process, inquiry process with HMRC? Is there a proposed changes to the approach they're taking?
No proposed changes. I think it feels like we're on the cusp of a change. It also feels, I don't want to kind of tempt fate, but we're definitely seeing some changes at the moment. So I said last year we'd noticed a drop off in the number of enquiries, but just over more recent months, including yesterday, we've started to see a few glimmers of light, if you like. So we've had a couple of decisions recently where ISBC have actually backed down and said, no, you're right, this is a valid claim. We've not seen that before the last couple of months. Okay. Just yesterday, we got a unicorn decision. We've definitely never seen this before. So one of the things that a taxpayer can do when HMRC have given their decision is take up HMRC's offer of an independent review. Independent, it's still part of HMRC, but it is independent. It's reviewed by their solicitor's office and legal service, so it's called SOLS. And SOLS exists to review HMRC's decisions to make sure that they are correct. And they have a target turnaround time of 45 days. It's currently taking about a year to get a decision back from SOLS, purely because they are inundated with requests for R&D reviews. And we've probably had getting up for 10 of those decisions back now over the last 12 months, all in favour of HMRC, until yesterday's, which actually came back in favour of the taxpayer, which was wonderful. So they've been waiting for this decision since last March. Well, the inquiry's been going on for about 2 years now. It's been sat with SOL since March last year. And we got the letter yesterday saying we agree HMRC didn't have enough evidence to get to the conclusion they got to. Your claim can stand. And then back in December, we also had some great success, which was a really brave client, actually. They had a lot of money riding on their R&D claim, and HMRC decided, the ISBC team said this wasn't R&D. So they appealed the decision to the tribunal and then worked with us to request what's called alternative dispute resolution. And I say they were brave because alternative dispute resolution is a mediated process. So HMRC appoint a mediator, and the taxpayer and HMRC work together with the mediator throughout a day-long face-to-face meeting to come to agreed terms. And that was so successful that after the pre-meeting, we didn't even get to the one-day meeting. After the pre-meeting, once HMRC had considered all the information, they conceded and allowed the claim in full. So I'm not saying that it's a complete shift by any means. We've still got a number of inquiries kind of rumbling on, but we're definitely seeing more light than we've seen for some time.
Got it. We need to go into pre-notification, but Jordan's asked a question, which is, assuming that he's referring to ISBC, are ISBC still refusing to take phone calls now?
Yes, I rang them last week to chase up a couple of jobs, and not only could I not speak to anybody on the job in particular, I had to ring up to speak about more than one client to find out where it was in the system. I had to ring up, I had to make separate phone calls. You know, they make it as difficult as possible.
All right. If anyone's got any other questions, pop them in the chat bar now, because we will rattle through pre-notification, and then if you've got any more questions, put them in the chat bar and I'll ask them at the end. Right. There's been some rumours and changes about pre-notification.
Yeah.
Mark, what's happening here? And you know, we've always had time periods by which we can submit and resubmit tax return R&Ds in our tax returns. Are the goalposts moving in relation to that?
Yeah, and I think that I'll keep to the point here because I haven't got much time. I think almost that's the takeaway. Like, don't assume you've got 2 years to do your claim, because this new pre-notification potentially means you don't. So what it is, pre-notification, this came in for accounting periods starting on or after the 1st of April 2023. So obviously a lot of the stuff we talked about today about new RDEC is 1st of April 2024 onwards. So this was 1st of April 2023. It's another way of HMRC putting in another hoop for people to jump through. They saw a lot of fraud in first-time claimants, so this was sort of targeted at this a bit. It's a clunky rule, in my opinion, but it is what it is. So basically what it says is you have to pre-notify HMRC within 6 months of the end of the accounting period for which you want to claim your R&D tax relief. So if we were talking about March 25, if you've got a 31st March 2025, you've got to submit this pre-notification to them before the end of September 2025, so within 6 months of the end of the accounting period in question. And if you don't, you can lose the ability to claim for that year entirely. So the 2-year window, forget it, it's gone. But you don't have to pre-notify if, and then this is where it can start getting a little grey and a little bit more nuanced. So if you've claimed in the last 3 years, you don't have to pre-notify, but you've got to keep in mind when they're talking about the last 3 years, they're expressly talking about from the end of the 6-month notification period and then going back 3 years prior to that. So for that example I gave, you start at the 30th of September 25 and work 3 years back from that, which would take you to the 1st of October 2022. So you've got to put a claim in that period. If you've done that, you don't have to pre-notify, but the claim that if you've claimed in that 3-year window, for it to be a valid claim to avoid needing to pre-notify, it can't be what they're calling a rejected claim. And there's still some grayness around what they mean by rejected claim, but you can simply assume if you had a claim that you put in, but it got inquired into and kicked out, that would constitute a rejected claim. So that wouldn't count as a claim within the last 3 years. And then there's even some nuances around those claims in the last 3 years, whether they were submitted as part of the original tax return or an amended tax return. And you get into some specifics here around exactly what accounting periods that related to, basically pre-1st of April 23, and whether they were part of an amended return that went in post-April 23. So it starts simple, as it sounds like. If you claimed in the last 3 years, you're fine. But there's these caveats and nuances. So like I said before, don't assume you got 2 years. Assume you got 6 months to look at this. And if in doubt, there's nothing stopping you from doing the pre-notification form. It's a relatively short form. Depends how much detail you go into on the R&D. It's a web-based form. The other thing I wanted to chuck in there, because I've seen people miss this, that it's per claimant entity. So if you're a group of companies and you've been claiming R&D in one of your entities for a number of years, and now you've got another entity in the group that, I don't know, you've moved some R&D staff into or started hiring R&D staff into, and you want to claim in that entity, and it's the first time you're claiming in that entity, you've got to pre-notify for that entity. It doesn't count that you've done a claim within the group in the last 3 years. So you've got to be, if we've got people on the call who are restructuring, and you're ending up with entities that perhaps haven't claimed R&D tax before, you've got to be thinking about this for those kind of exercises as well.
Yeah.
It's not straightforward, is it? So I think you can take some comfort. So I think the comfort comes if you've had a successful R&D claim in the last 3 years, you should be okay.
Yeah.
On the surface, yeah.
Other than that, it's probably worth dropping your R&D provider a note to make sure you don't miss the window. Like ifs and buts in tax make me nervous.
Yeah.
Right.
Even if you've had a successful claim in the last 3 years, there may be an impact if that's been made in an amended return. So you can't even say that. So for me, notification is the biggest risk issue. And if anybody takes anything away from today, it's to go away and find out where they stand on notification. Because everything else, your overseas stuff, your subcontracted stuff, that's irrelevant if you can't actually make a claim.
Yeah.
Hugh's asked a question, but I think we've covered it off. If there's a follow-up question, just drop me a line. But yeah, guys, thank you so much for the time today. We've run up right against time. We covered a lot of ground. But thank you so much. It was really insightful, and I really appreciate you guys taking the time. Thanks, everyone. Speak to you soon. Bye.
Thank you.
Well,
Bye.
thank you.
Bye-bye. Everyone, thank you.